Hi there and welcome back. I have a terrific guest today. It happens to be Joe Cucchiara, and he's with Partners Mortgage and a phenomenal business real estate lending mind.
Thank you.
How's that?
Perfect, I think. It's
Hey,
great.
you know, well, I have to tell you though, Joe, I do prefer the radio that we do because you got to worry about the lighting and everything else.
It's a little easier, isn't it?
Too shiny. Yeah. We could wear our fuzzy slippers in and do the radio show. So anyway, well, thank you for taking time to come by.
My pleasure. Good to be here.
Well, I'll tell you what, why don't we encapsulate, because people go, how is this different? How is 2013 different from 2012 and yada, yada. So let's kind of go back to 2012, which seems like 100 years ago.
Yeah, right. Well, we had a big refinance market. Rates are at all-time lows. People were taking advantage of it, which is great. Purchase was decent activity, although we were in the middle of a craze in terms of the multiple offers. The housing market was really coming to a head. I think more people were finally realizing that we may see the end of the all-time low interest rates, and that was a big push. And of course, it was buying season. But 2012 was really, really busy. A lot of people taking advantage of refinances. However, the market really pushed up heavily with the purchase market as well. I mean, it was very, very active.
And we saw a big surge in pricing.
Right. Big surge in pricing.
Absolutely. Now, how did the lending products change?
Well, the lending products have, overall, they've been a lot more conservative. Although over the last year or so, one of the things that's come back to the market is jumbo pricing. Jumbo loans, more lenders have been offering them. You know, back in 08 and 09, almost all jumbo products went away because of the risk of the lending environment. But they started slowly coming back in 2011, 2012. So that changed some of the complexity of the market as well. A lot more jumbo products being offered.
Now, how come you stuck it out? People ask me that all the time. You are on the hot seat.
I have to raise a family. I have 2 daughters that are going to college, so I have to stick it out.
You need that money tree.
That's right. No, it's a great business. I love people, and I love working with people like you. As we talked about before, the team concept. I've been doing this a long time, and you know, one of the things that we all know that will happen for sure is markets will change. They always do change. And you have to just know that and understand that. And so when they do, you have to be prepared for them, but even more so have the best background, team members, and support you have. And so yeah, it's tough when markets change like that, but it's great because ultimately what we're doing is helping people make wise financial decisions. And if we could sift through all the mess that we have to do and get back to that, that's what makes it fun.
And I really enjoy your Trusted Partners segment of your site, because who do you trust? I mean, you hear people are lying about what kind of cancer they have. Michael Douglas, we won't even go into it, but I mean, if you've got cancer and you can't tell the truth about it, what's happening here?
Well, it's a big deal, and for most people, as you know, and we know, that it's the biggest financial decision they make is buying a home or a transaction, whether it's a rental property or second home. And so you have to be surrounded with trusted advisors. And so you're right, I'm a big fan of that. As you know, that on our website, we advocate that, and we advocate people having a team, financing, real estate agent, and financial planning, quite frankly, tax planning. A lot of that goes into that. I mean, that, for most people, their liability, their mortgage is their biggest liability. And how do you best protect that? You get a group of people around you and help you make those wise decisions.
And I think that people wait too. I think we talked about that either in another show here or on the radio, was that they wait too long to make that financial decision.
Right.
They listen to too many family friends and let the people who know nothing, love them to death, but who know nothing, guide them.
Too many experts. I mean, too many apparent experts. We would listen to our family members and our friends. I always say, get advice from them, certainly listen to them, even go online and do a little research. It's good to do some research, but sit down with someone you trust and sit down with someone that you've been doing this or that has been doing this for a while, and really look at all your options from not only just what my payment's going to be and what's the interest rate. Quite frankly, too many people will call and they're uneducated, and they'll just say, what's your rate? There's so much more than a rate. You know, obviously a rate is important, but what kind of program, how long are you going to be in the home? Are you going to be any strategies around? Are you going to be adding on, remodeling? Are you going to own it for 5 or 6 years? A lot of people, when they buy a home for the first time, they're only going to be in it 5 to 7 years. So a lot of planning behind it. So yes, get advice, go online, but ultimately sit down with an expert.
And I see people doing that for their exchanges. And the biggest red flag, if I can say anything right now before we move on, is do not try to do an exchange just yourself. The minute the government sees, the tax preparer sees that you've done it without the help of a facilitator, you are pretty much toast. You're going to get audited. And you probably did it wrong because there are too many little...
So many tax ramifications. Be careful with that. I mean, any kind of 1031 exchange, you have to have someone that's qualified and knows what they're doing. Absolutely. And that's part of the team, right?
It sure is. We're going to talk more about team and about what the financial markets are doing now and excluding Wall Street. So come on back.
Bobbi Decker is a realtor that cares about community. Few things say more about Bobbi's commitment than her support of many of our local charities.
One of my favorite things to do is to give back to nonprofits that are in our communities. Peninsula Humane Society, which takes care of our furry little friends, making sure none of them are abandoned. To Career Closet, which makes sure that the women who go there are outfitted with clothes so that they can get jobs. To College Track, which ensures that the students are not forgotten halfway through their college career. They have enough money to actually finish. And then there's Build, which helps miniature entrepreneurs become big entrepreneurs. All of it's giving back to nonprofits that make a difference, and that makes me feel good. Welcome back, and I'm here with Joe Cucchiara. And you know, he does Real Estate 360 Radio at KDOW, KDOW 1220 AM.
That's correct.
And it's a fun show. Again, trying to educate the public to make the right decision.
That's what we do, and along the same lines what you do and you advocate, one of the reasons we work so well together on the TV and the show is because it's helping people make wise financial decisions. As you know, that's part of our show. That's what we do. We surround ourselves with experts. We try to get as many guests as we can, content as we can, information to share those with the consumers and then help them make wise financial decisions, whether it's buying a home, selling a home, financing a home, you know, all kinds of decorating a home. We could go on and on. But the idea is that when they come to us, we're not selling them on something.
Right.
And I think, unfortunately, it's a new concept. It shouldn't be.
It shouldn't be.
When there's a radio show, TV show, or even, quite frankly, ads, most of them are driven by some type of sales approach, marketing approach, instead of a knowledge-based approach. And so that's what I like to do.
Like the Ben Franklin, you know, all this other stuff. But you don't have to move widgets around.
Right.
When people are educated, they will make the right decision. Don't you agree?
That's right.
Okay, so based on that, based on you and I knowing that when they're educated, they'll make the right decision, let's talk about the differences generationally.
Okay.
The young buyers coming at you, wanting a loan, Joe.
Young buyers will spend a lot of time online, and they'll spend a lot of time social media, asking friends, coworkers. There's even intranets within their company. They'll do a lot of, seeking of information online, more than any other age group. So when you get them, typically they're pretty prepared about the rates, in general. Like, my friend told me this, my family told me this, my coworker told me this. So they're pretty knowledgeable about rates, but they don't really understand programs. They don't understand what you need to close. They don't understand concepts like gift funds, how those have to be sourced. There's so much about the lending industry, especially it's so conservative now. So the younger group, although they're more informative about rates, they have no idea about certain amount of assets. You have to have reserves and accounts to close a loan. All these other things that typically the older generation are aware of those types of things.
So what would you say as far as the seniors, because you and I see a lot of seniors too, that seems to be pretty much split. The poor middle guys are in there just trying to get those kids through college and get their parents settled, Seniors, another very, very trusting segment.
Yeah, just the opposite. So they know very little what's going on online, social media, all that kind of stuff. The challenge with seniors a lot of times is, and rightfully so, they don't trust. And so they're very nervous about, decisions. And I don't blame them, because they've had a lot of programs that have scammed the senior citizens. And we'll talk shortly about some of the reverse mortgages. That's one of them. But in general, senior citizens are a target for a lot of unscrupulous activities. So what you find is some of them are very nervous, and then they're used to old school lending, which is sometimes, well, can I just give you my bank statement, and can I just give you my social security number, and can I just get a loan?
Just give it to me.
You have to re-educate them on the process.
Well, they're not used to giving DNA
That's true.
in order to get
Right.
a loan or anything else. It's a handshake. It was always done
That's
on a
true.
handshake. And so they tend to be, yes, you're right. And you can segment those up. We talked about that another time, is the boomers who are never going to get older.
The baby boomers, they're unique. They're the ones that are kind of right in the middle. So they're pretty knowledgeable, but they do understand finances more. I would have to say that group in the mid-40s, 50s, what they do is they've typically purchased a home before. They've had multiple transactions. They know what it's like to buy up. They understand down payments. They understand cash reserves. They understand this process probably more than the younger generation and than the seniors, for sure. And if they've been in the Silicon Valley for a while, they get it. So they're easy to work with, for sure. But they're also wise. They're not going to. What I know about them more than any of them, honestly, is the baby boomers. And one thing I would say is they're more loyal than any other group. And maybe because if they've landed on a team or someone they really trust, they will keep going back to that trusted advisor.
I tend to be that way with even people who clean my carpets. They do a good job, Joe. They're never off my card, They get referred to everyone until they drop in their tracks. Because in this day and age, it's just too scary. That's why the young generation going online and surfing for loans and saying, well, I got offered this fantastic. Well, they didn't know about points.
Yeah, the scary part about being online is, I would say, if it's one lesson you learn, if you're listening to this, is do it for informational purposes only, period. Done. Don't take it to the bank. Because the concept of marketing online or some of these is really just to get you to call or to email. So a lot of it's really deceptive practices. I hate to say it, it's really borderline. They're advertising interest rates, but then there's little hidden stories underneath that.
Yes.
Stories. So, I would say, again, the number one thing, do a great job, get all the information you can, but then sit belly to belly or across the table from someone that knows what they're doing and talk to them about the real details of a purchase.
You want to do it eyeball to eyeball. You do not want to do it with a little tiny, beautiful screen. So stay tuned, and we're going to delve into more with Joe Cucchiara in our third segment.
Bobbi Decker is an award-winning veteran of the real estate industry. She has assisted hundreds of clients in Northern California to buy and sell properties successfully, as well as educating the public via her television, web, and/or newspaper articles.
As a former high school teacher of biology, my students' success was my #1 priority. Now, as a real estate broker, educating and informing my clients and readers and viewers is my new priority. Welcome back. We have Joe Cucchiara here from Partners Mortgage, and we've covered the youngins and the oldins, and now we're going to settle in on the oldins, or our reverse mortgages.
Right.
And we were talking about how much they've morphed. Why don't you go into detail on that?
Some major changes. Reverse mortgages are great products for the right person. So one of the things they've changed the last couple of years is there's a counseling component involved, which is important. They have to get family members involved and actually go through a third-party counseling which is important because too often times before they would rely on someone that might give them information that wasn't actually correct and really get them to a situation where they could be in financial trouble. So that was one of the first step. The new step that's coming, there's 4 different things that are coming in reverse mortgage. One of them is more financial scrutiny, surprise, surprise. So they're going to be, even though typically reverse mortgage is the house and not the person, believe it or not, they are going to look at the finances a little closely. And if they're really borderline, and even if it's a good deal to make this loan on the property, they may have some more financial requirements than they did before. That's one of them. The second one is they may require, if there is some tight finances, or if they're not quite sure about reserves and such, they may require them to do impound accounts, include their taxes and homeowners insurance, kind of like the traditional lending does today. Before they did not do that with reverse mortgages. And the other one is they're going to really limit the amount of cash you could take out. One of the things you could do before with reverse mortgages, if the equity was there, it'd say, give me a check for $300,000, give me a check for $400,000. That's going to be limited now, depending on what the loan to value is. They may limit a certain max. I don't know what it's going to be, but it's going to be limited.
And I know that exists because we went to talk to somebody who's living in a home in a reverse mortgage for over $1 million. Her reverse mortgage, I almost fell off the couch when she said that. I said, well, why do you want to go? Because if you go to rent in the area that you're living in, the rents are very, very high. So just live with the reverse mortgage until certain events take place, and then scrutinize it. But my goodness.
Yeah, no, it's a great deal. And the fourth one, and the one to be careful of, is that they had a provision before where, if you didn't have some legal assistance, they could actually evict a spouse, depending, let's say someone passed away, and now they can't do that. So there's some legal provisions in place that if one of them passes away, the spouse cannot be evicted. So there's some legal wording in the documents now with that. So really be sure, again, here we're back to the same old thing, check with someone you trust, sit down with someone that knows this before you make these decisions, because they're critical and they're important.
Absolutely. And one other thing that we didn't mention real quickly was the fact that, oh gosh, Joe, I went into a mental cul-de-sac. I'm sure it'll come back to me. But it had to do with your spouse dying and making sure that you've got all of the T's crossed and the I's dotted.
That's similar. Now, if you have a situation where there was a lot of concern, people looking in the reverse mortgage, one of the questions that comes up, I think you're talking about, is that, what if someone passes away? Does the bank take that property back? No, that's not the case, because that's a fear of most people. What happens is if one person passes away or both, that will resort back to the will. That's when you better have a good will, because it'll go back to the beneficiaries. That's where it's now, we're talking about another critical thing. If you don't have a will, or trust, you better be careful, because then that could create a whole new set of problems.
And it does. I see probates coming up, and you think, we're so highly educated. How can a probate even exist in today's?
You got to have a trust. If you want to avoid it, you have to have a trust.
Okay, we have probably 3 minutes left. Tell me look into your crystal ball and tell me what's going on for 2014.
2014, I think interest rates have come up a little bit. They've stabilized, so they're still, the 30-year money's still in the low 4s. I think we could probably, it's probably going to stay in that frame for a while, that range for a while, I should say. Purchase market has picked up. I think that, there are going to be more and more people realizing that the people that really that lost out, that were on the sidelines because they were just tired of getting beat up with the multiple offers and they couldn't afford, and a lot of those types of things. Now some of those people may come back out. It's looking like they're going to come back out and maybe test the waters again and purchase. So rates are definitely up. The all-time lows are gone. I can't see those coming back no matter what. It depends, right? You never know. But now I would say if there's any thought that you want to purchase a home in the next 2 to 4 years, I would do it now, because there's a better chance that rates will be even higher this time next year than they are today.
Oh, I believe that. Unless, of course, we're still out to lunch as far as...
Well, that's a whole nother conversation.
The government. It is. It's another hour, so we can't bore you with this program. But that's, it looks healthy. I think it looks healthy.
It's a healthy economy. I mean, the jobs are coming back. They're not, the train is kind of rolling down the track at a pretty steady rate.
We're getting healthier.
We're getting healthier.
Right. We haven't lost the 25 pounds yet, but we're getting there.
It's interesting because there's corporate profits are really, really good.
Very high.
Right?
Very high.
But that's deceiving because there's not a lot of hiring going on.
Right.
So there's corporate profits and there's the jobs and there's consumer confidence. All those things have to piece together. It's coming back. I think that it's promising. But now still a great time to buy or do transactions with real estate, because if you plan to do something with real estate long term, it's the best thing you could do, in my belief.
Well, thank you for sharing those thoughts.
You're welcome.
And I just want to tell you, Joe's right. Get out there and make something happen. Sitting on the fence never makes anything happen. And I know that Joe will agree that buying a piece of property starts the cornerstone of your foundation of financial health and financial building. So thank you for being with us today. Come back again. I'll have another interesting guest, and we will help you understand and be able to make great decisions once you've heard more information. So thank you again for being here.